Imagine this scenario for a second. You are standing in a massive, just this echoing warehouse.
Right.
You hold a scanner, you point it at a single barcode on a pallet of server racks, and you pull the trigger.
Just a standard warehouse action?
Exactly. But in the literal microsecond it takes for that machine to beep, this staggering cascade of events happens globally.
Oh, it's wild.
Right. Your company's inventory valuation adjusts, a purchase order is reconciled, regional taxes are instantly calculated and filed.
All in milliseconds.
Yeah, and the supplier's payment gateway is authorized, and the corporate annual budget is updated on the CEO's dashboard halfway across the world.
It honestly sounds entirely like science fiction.
It really does.
Yeah.
But today, on this deep dive, we are looking at a blueprint that aims to make this instantaneous reality, like the absolute baseline for modern business.
It is a profound shift in how we think about data velocity, for sure.
Definitely.
I mean, if you are a learner or just a professional trying to navigate the current landscape, you know the pain of the alternative.
Oh, the endless spreadsheets.
Right. We are all dealing with disconnected pieces of data, software tools that just absolutely refuse to talk to each other, and, the relentless headache of information silos.
Yeah, we build these towering technology stacks in our businesses, right? But because they are built on fragmented foundations, we spend half our days just manually moving data from one bucket to another.
Exactly. And that is the exact problem we are tackling today.
Our mission today is to explore the bleeding edge of enterprise software. Specifically, how it is evolving to kill the information silo once and for all.
And we are doing this through the lens of a massive, really fascinating source document we got our hands on.
Yeah, it's called the Comprehensive Guide to the APS Accounting and Inventory System.
APS stands for Advanced Program Solutions, just for context.
Right, and the guide promises a cloud-based, fully bilingual, so our Arabic and English ERP system.
Though calling it an ERP feels woefully inadequate, honestly.
I mean, yeah. It claims to completely fuse accounting, inventory, manufacturing, payroll, and this remarkably deep layer of artificial intelligence into one unified platform.
Which is a huge claim.
So, okay, let's unpack this.
Okay.
Because the way the developers describe the system is fundamentally different from standard corporate jargon.
Yeah, they don't call it a software suite at all.
No, they explicitly model it after a living organism.
That biological framing is, it's absolutely essential to understanding the architecture here.
Right.
The developers refer to APS as a neural business ecosystem.
A neural ecosystem, so like a brain.
Think about the human nervous system. If you accidentally touch a hot stove, your finger does not draft an email to your spinal cord, right?
Right, that would be terrible.
Yeah, your spinal cord doesn't review the request, open a ticket, and eventually send a work order to the brain to approve moving your hands.
You'd have third-degree burns by then.
Exactly. The sensory input and the motor reaction are part of one continuous instantaneous loop.
So APS applies this biological continuous loop to corporate data.
They do. They call it the domino effect.
The domino effect. Okay, I want to ground this because I always picture traditional corporate software like a giant, creaky Rube Goldberg machine.
That is a very accurate analogy, actually.
Like a warehouse worker scans a barcode, which tells the warehouse software a box moved.
Yeah.
A day later, a manager exports that data into a CSV file.
And then emails it to finance.
Right. Finance imports it into their accounting software. Someone realizes there is a formatting error, because of course there is, so they have to manually fix the cells in Excel.
It's just friction at every step.
By the time the chief financial officer sees the data, it's a week old and likely riddled with human translation errors. But you're saying the domino effect functions more like a multiplayer video game server?
Yeah, that is a highly accurate way to visualize it. I mean, in a multiplayer game, if a player in Tokyo opens a door, the server state updates instantaneously for a player in London.
Oh, that makes total sense. There's no lag.
Right. There is no batch processing at the end of the day to reconcile who opened what door. The shared reality is just constant.
So in the APS ecosystem, when that warehouse worker scans the barcode, it triggers a simultaneous chain reaction across the entire underlying database.
Exactly. It doesn't send a message to the accounting module to update later. The system itself recalculates the inventory cost, generates the supplier invoice, and applies the taxes.
Like specific municipal and federal taxes for that jurisdiction.
Yep. And it posts a mathematically perfect double-entry journal directly to the general ledger all in a fraction of a second.
Wow. No human intermediary at all.
No human intermediary, no exporting files.
I can see how that eliminates the Rube Goldberg machine entirely. But
Mhm.
it also raises a massive red flag in my head.
I think I know where you're going with this.
If the system's automatically updating ledgers, calculating taxes, and moving money around in literal milliseconds, what happens if there is a mistake?
The speed becomes a liability.
Right. If a human accidentally scans the wrong barcode or inputs an extra zero on a purchase order, that catastrophic error would propagate through the entire global company before you could even blink.
It's a terrifying thought for a CEO.
Seriously, who is providing the oversight on a system that moves at the speed of light?
Well, oversight is the critical vulnerability in any high-velocity system. And this brings us to how APS deploys its AI arsenal.
Okay, AI.
Yeah, they've built this integrated layer called the AI-powered accounting doctor and assistant.
A doctor? I like that.
But they made a very specific, really interesting architectural choice regarding its permissions. All of the AI features are strictly read-only.
Wait, I have to pause there. The whole pitch so far is automation, right? Milliseconds, the domino effect.
Yeah.
If the AI is so incredibly capable, why put a speed bump in the form of a read-only handicap? Is this like a processing limit?
What do you mean?
Like running autonomous execution across millions of database nodes is just too expensive or computationally heavy for the servers?
No, actually, it has absolutely nothing to do with server load. It has everything to do with psychological trust and legal liability.
Oh, legal liability.
Yeah, it addresses the deepest hurdle in financial technology today. I mean, an AI can process 1 billion data points a second, but an AI cannot go to prison if a fraudulent tax return is filed.
Ah, you go to jail, not the algorithm.
Exactly.
Yeah.
The business owner, the human executive, bears the ultimate, inescapable legal liability for the financial reality of the company.
So by enforcing a strict read-only boundary, APS positions the AI as a brilliant advisor, not a liability.
Right. It's an untiring safeguard against human error, but it is never a rogue agent capable of altering the books without consent.
So it can't just move money on its own.
Never. The AI will analyze the data, flag anomalies, and even draft the corrective journal entry, but it absolutely cannot post that entry without an explicit human click of approval.
That makes a lot of sense. It maintains human agency while leveraging machine intelligence.
Exactly.
It's sort of like the ultimate navigation system. It will aggressively warn you that you were driving toward a cliff. It will even plot the detour for you, but it forces you to turn the steering wheel yourself.
That is the perfect analogy. And its ability to spot those cliffs is expansive.
Tell me about the AI doctor part.
So the AI doctor acts as a continuous anomaly detection engine. It scans millions of transactions in the background, looking for deviations from historical patterns.
Like what kind of deviations?
For example, it might flag a sudden 20% spike in stationary expenses that a human might easily miss. Or, more practically, it hunts down duplicate invoices.
Oh man, duplicate invoices are the absolute bane of accounts payable.
They really are.
Like a vendor emails a PDF invoice on a Monday, 2 weeks later they haven't been paid, so they just send the exact same PDF again.
Right, they panic.
2 different clerks process the 2 emails, and suddenly the company has paid $50,000 twice for the exact same service.
And a human clerk misses that because the processing events are separated by time and they're hidden within a massive volume of paperwork.
It's needles in haystacks.
But the AI doctor sees the identical vendor ID, the matching total, and the corresponding line items, and instantly throws a red flag before that second payment can even be authorized.
That alone would save a large company millions.
Oh, easily. But the AI is not just looking inward at your own data. It is constantly looking outward, conducting automated regulatory monitoring.
Yeah, this is the part of the guide that I found genuinely staggering, the sheer scale of it.
It's massive. The system actively scans thousands of pages of daily regulatory updates across 7 different countries.
Thousands of pages. Every day.
Every single day. It reads the changing municipal tax codes, the shifting federal labor laws, the new compliance mandates, and it translates those dense legal changes into proactive warnings for the management team.
Just think about the sheer volume of reading that entails. I mean, thousands of pages of dry, dense legislative text.
A nightmare for a human.
Right. In a traditional multinational corporation, you need a whole floor full of corporate lawyers and regional compliance officers just to keep up with that.
And they still miss things.
Exactly, and this system is doing it in the background. Can you give me an example of how that abstract reading translates into a concrete read-only warning?
Sure. Look at their integration with the Wage Protection System, or WPS.
Okay, WPS.
In many regions, WPS is highly regulated to ensure laborers are paid exactly on time and according to their contracts.
Right.
The penalties for noncompliance are severe legislative fines or even the suspension of business licenses. So before a payroll manager in APS can click Approve on a monthly payroll run, the AI doctor runs 12 separate verification points.
12. Wow.
Yeah, it checks the data against the current labor laws it just read that very morning.
So it is actively preventing you from making a mistake based on a law that changed literally yesterday.
Yes.
It is like having a compliance officer who never sleeps, just standing over your shoulder saying, hey, before you authorize this transfer, you should know the regional overtime law was amended yesterday, and these 3 employees are now underpaid by a fraction of a percent.
Exactly that. It shifts the entire corporate mindset from reactive problem solving, paying a massive fine after the regulators catch an error, to proactive prevention.
Which is invaluable.
But as powerful as a background auditor is, an AI that only flags errors can feel kind of punitive.
Right, like it's just constantly scolding you.
Yeah. So APS designed this intelligence to be highly interactive, to actually sit right on your desk and assist you.
Okay, that leads into the interface. How APS is trying to break down the barrier between the human user and the underlying database using natural language.
The interface is really where it shines for the average user.
The APS AI assistant just sits right in the top navigation bar, right? You don't have to click through endless nested drop-down menus to find a specific subledger.
No, you just ask it a question in plain English or Arabic.
The transition toward voice-first navigation seems like a major theme in modern enterprise software.
It absolutely is. You can simply type or speak, how do I record a depreciation entry for a new delivery truck?
Yeah.
And the assistant just guides you.
But it goes far beyond a glorified help menu, doesn't it?
Oh, way beyond. They feature a tool called AI Suggest.
How does that work?
Well, a user can speak a chaotic, unstructured thought into their microphone. Something like, we bought 3 new laptops today from TechCorp for $5,000 using the corporate visa.
Just conversational.
Right. The AI processes that natural language, identifies the correct asset accounts, maps it to the corporate credit card liability, and drafts the mathematically balanced double entry journal for you to review.
That is insane. It just sets up all the debits and credits automatically from a voice memo.
It really does.
And then there is the AI report builder, which I think fundamentally changes who gets to understand a business.
Oh, absolutely.
The guide notes, you can just type, show me a comparison of our most profitable product lines in the northern region over the last 3 quarters, and it instantly generates a visual chart.
Which is huge.
Right, because for anyone listening who hasn't stared at a database all day, doing that normally requires writing in SQL query.
Which is not easy.
No, SQL is essentially this complex coding language that databases use to talk to each other. You have to know the exact names of the tables, the relationships, the syntax, but this system just does the translation for you.
It is the ultimate democratization of corporate data. For decades, extracting vital business insights required a human translator.
Right, the IT guy?
Yeah. A marketing director couldn't just get an answer to a complex sales question. They had to submit a ticket to the IT department or the data analytics team and wait a week for a specialist to write that SQL query and build a report.
That creates a massive bottleneck for decision-making.
APS flattens the learning curve entirely. The software adapts to the user's natural language, rather than forcing the user to learn the software's structural language.
And speaking of flattening barriers, the live column translation feature feels like a superpower for global business.
Oh, the translation feature is incredible.
The guide states that APS can translate the columns of any financial report into 26 different languages instantly.
Without altering the core accounting data underneath.
Which is vital. Consider the friction in a standard multinational team. You have a warehouse manager in Berlin, a sales director in Madrid, and the executive board in Dubai.
Right.
They all need to analyze the exact same quarterly financial report to make a synchronized decision.
And in a legacy system, you either force the German and Spanish managers to operate in English, which, inevitably leads to nuanced misunderstandings.
Exactly.
Or you export the financial report, send it to a translation department, and by the time it gets back, the data is a week old. The reality on the ground has already changed.
But the live column translation eliminates that friction instantly. The warehouse manager opens the real-time report and the interface is in German.
Yeah.
The sales director opens the exact same link and sees Spanish. The executive sees Arabic.
It's seamless.
They are all looking at the identical, real-time mathematical truth of the company, but it is presented in the linguistic format they comprehend intuitively.
It is an incredible way to keep a global team on the exact same page.
But okay, I have to play the skeptic here for a moment.
Fair enough.
AI interfaces that draft entries and translate languages are incredibly flashy. They demo really well. But if the core underlying math engine of the software is weak, then the AI is just a shiny hood ornament on a car with a broken engine.
That's a very valid concern.
The heart of an ERP has to be cold, hard, unforgiving accounting logic.
And the documentation suggests they have built an incredibly rigorous engine room.
How so?
Well, the foundation architecture of APS is fully compliant with GAAP and IFRS.
So, generally accepted accounting principles and international financial reporting standards.
Exactly. The absolute gold standards of global accounting integrity. The system utilizes automated double-entry accounting that is inextricably linked to every single module. There are no isolated, single-sided entries floating around. Everything is balanced. It also supports infinite currencies, constantly pinging global servers to update exchange rates in real time.
Oh, that's helpful.
And it manages fixed assets with 3 separate automated depreciation methods.
Okay, all of that sounds robust, but I have to zero in on one specific claim in this section of the source document. It is a claim so bold, I honestly thought it was a typo when I first read it.
I know exactly the claim you mean.
The guide states that APS can perform a financial year-end close in 90 seconds.
90 seconds.
I mean, I've seen the sheer friction of a corporate finance department in December. A year-end close traditionally takes weeks of agonizing late-night reconciliations.
It's usually a nightmare.
90 seconds sounds physically impossible for a server to compile, let alone balance.
The 90-second year-end close is definitely the most provocative claim in the guide. But it makes perfect mechanical sense when you understand the server architecture we discussed earlier.
The domino effect thing.
Exactly. The reason a traditional year-end close takes 3 weeks of late nights is because it is basically an archaeological expedition.
That's a great way to put it.
The accounting team is forced to dig through a year's worth of siloed data, trying to match up records that were created in disparate systems at different times by different departments.
Right. Purchasing bought something in March, but the warehouse didn't log the receipt until April.
Yes.
And finance didn't get the invoice until May, and they categorized the expense wrong. At the end of the year, the accountants are trying to force puzzle pieces together that were cut from completely different sheets of cardboard.
Exactly. They have to retroactively reconcile all those discrepancies.
But in the APS ecosystem,
Because of the continuous server state, that domino effect, there is no archaeology required.
yeah.
Every single transaction for the entire year, whether it was a barcode scan, a payroll run, or a manufacturing material withdrawal, instantaneously generated a mathematically balanced GAAP-compliant double entry in the central ledger the millisecond it happened.
Wow.
The system uses delta updates, meaning it only writes the exact change to the database in real time, rather than relying on massive end-of-day batch processing.
So the books have been continuously, flawlessly reconciling themselves every millisecond of the entire year.
Precisely.
Okay, I see. So they aren't somehow doing a year's worth of math in 90 seconds. The math was already done in real time.
Yes. So what is the server actually doing during those 90 seconds?
It is basically performing the administrative finality of the accounting cycle. The server is systematically rolling over the final asset, liability, and inventory balances to establish the opening position for the new year.
Okay, just moving the starting line.
Right. It is clearing out the revenue and expense accounts, transferring the final net income to the retained earnings account.
Standard accounting wrap-up.
And most importantly, it is generating the cryptographic hashes to secure an unalterable audit trail, permanently locking the previous year so no historical data can ever be tampered with.
So it takes 90 seconds because the system doesn't have to search for errors. It just has to lock the doors and turn over the calendar.
Exactly.
That is a fundamental paradigm shift for how a finance department operates.
Yeah.
But internal ledgers, no matter how perfectly balanced, are only half the reality of a business.
The other half is the external world. What happens when chaotic external forces like banks and payment gateways get involved? How does APS handle the flow of capital and the inevitable messiness of bank statements?
Bank reconciliation is another historically painful friction point that APS has heavily automated.
How does it pull it in?
The system is designed to ingest your external bank statements, either via a traditional CSV file upload or through a direct live API sync with the banking institution.
Okay.
And then it uses the AI to match those external records with your internal ledgers.
And the guide specifically highlights a feature here called the Smart 1% Flexibility Margin. I find this fascinating.
It's a very clever feature.
I like to think of this 1% margin like a highly intelligent bouncer at an exclusive club.
Okay, I like where this is going.
The bouncer holds the VIP list. A guest walks up, hands over their ID, and it says Jonathan, spelled with an H. But the VIP list has it typed as Jonathan with an A.
The typo.
Right. A rigid, dumb security system says names do not match, access denied, and halts the entire line while a manager is called.
Which holds everyone up.
Exactly. But the smart bouncer looks at the guy, looks at the list, recognizes it's a minor typo, and just lets him in, keeping the line moving.
The bouncer analogy captures the logic perfectly. I mean, in real-world banking, there are constantly tiny, fractional discrepancies.
All the time.
A correspondent bank deducts a $3 wire fee in transit, or a fluctuating currency conversion causes a rounding difference of a few cents.
Yeah.
In a rigid legacy ERP, that tiny mathematical discrepancy causes a hard failure. The system just refuses to reconcile the account.
And an accountant has to spend an hour hunting down a 4-cent variance just to force the month-end books to balance.
It completely grinds the department to a halt over pennies.
But the APS AI applies contextual intelligence.
Right. It analyzes the date, the vendor, and the bulk amount. Yeah. It sees a 99.9% match, recognizes that the fractional difference falls within the 1% flexibility margin, and deduces it as a standard banking fee.
And then does it just fix it?
It proposes the match to the accountant, and from that very same screen, it will automatically draft the journal entry to expense that minor fee to the correct ledger account.
It prevents minor external friction from breaking the internal flow. That is brilliant.
It really is. And they pair that smart reconciliation with a very modern approach to money coming in, too. The guide details their e-collections ecosystem, specifically their integration with tap payments.
Ah, tap payments. The goal there is to accelerate the velocity of cash, right?
Exactly. Rather than emailing a static PDF invoice and hoping the client eventually cuts a physical check, APS allows the user to generate a secure, encrypted payment link from directly inside the invoice generation screen.
And you can send that link via WhatsApp, SMS, or email, right?
Yep.
And it supports everything. Visa, MasterCard, regional gateways like MATA in Saudi Arabia, Net in Kuwait, Fowry in Egypt.
All of them.
But for anyone who doesn't build software, can you give an ELI 5, explain it like 5 breakdown of how the system actually knows the client paid? The guide mentions a webhook.
Sure. Think of a webhook as a highly sensitive digital tripwire connecting two separate computer systems.
A tripwire. Okay.
When the client receives that WhatsApp message, clicks the link, and enters their credit card, they're interacting with the tap payment server, not your APS server.
Right.
But the moment tap payments authorizes the charge and the money clears, it trips the wire. The tap server fires a tiny packet of data, the webhook, back to your specific APS database.
So it effectively shouts, invoice 405 is paid.
Exactly. And because of the domino effect?
Ah, the domino effect again.
Precisely. The instant APS receives that webhook, it automatically marks the invoice as paid, instantaneously generates and emails the digital receipt to the client, and updates the general ledger to reflect the increase in cash and the decrease in accounts receivable.
Wow.
The friction of manual invoicing, manual payment verification, and manual data entry is completely erased.
It shrinks the time between delivering a service and having that cash usable in your bank account down to zero.
It's down to zero.
Now, money is ultimately just data. It's abstract numbers on a screen. But a massive chunk of the global economy deals in physical reality. Raw materials, boxes on shelves, supply chains.
The physical world is messy.
Very. How does a system optimized for digital velocity handle the heavy, tangible constraints of a physical warehouse?
Well, it handles the physical world by taking a highly controversial, rigid philosophical stance on how inventory is valued.
Controversial how?
When you read the inventory costing section of the APS guide, there is an absolute non-negotiable rule. The system exclusively uses automated average cost.
Exclusively?
Yes. It explicitly bans the use of FIFO, first in, first out, and LIFO, last in, first out.
Okay, I have to challenge this, because even as a layman, I know that FIFO and LIFO are the gold standards of inventory accounting globally.
They are incredibly common, yes.
FIFO assumes you sell your oldest stock first, which matches physical reality for perishable goods. LIFO assumes you sell your newest stock first, which companies use for tax advantages during inflation.
Right.
Banning the two most popular accounting methods in the world seems like a massive, glaring limitation for a comprehensive ERP. Why would they do that?
It definitely appears as a limitation at first glance until you examine it through the lens of database optimization and the strict requirement for real-time processing.
Okay.
The rejection of FIFO and LIFO is entirely about protecting the integrity of the domino effect.
How does FIFO threaten the server state?
Think about the mechanics of FIFO. It requires the system to maintain distinct historical cost layers for every single batch of items you ever purchase.
Right.
If you sell an item today, the system has to look back 3 months to find the exact purchase price of the oldest specific batch in the warehouse to calculate your cost of goods sold.
Okay, that seems straightforward enough.
But what happens if you discover an error in a purchase order from 3 months ago and you have to adjust the cost of that old batch?
Oh, wow. If you change the math on the first batch, it retroactively changes the math for every single item sold from that batch over the last 90 days.
Yes. It creates a brittle, complex chain of historical dependencies.
That sounds like a nightmare to process.
It is. To process a retroactive adjustment in a FIFO system, the database basically has to halt, unspool months of historical transactions, recalculate the layers, and rewrite the ledger.
And you can't have a fast system if it's constantly pausing.
Exactly. You cannot maintain a microsecond real-time ecosystem if the server constantly has to pause to execute massive historical recalculations.
So automated average cost solves that.
Automated average cost does not rely on specific historical batches for financial valuation. It is a constantly updating, mathematically smooth average of your total inventory pool. Every time you buy new stock, the average cost of the total pool just shifts slightly.
It is always looking at the fluid reality of the present moment, rather than trying to trace a specific dollar to a specific historical box. The math serves the speed of the ecosystem.
Precisely.
But wait, if they don't track historical cost layers, they still have to track the physical boxes, right? Especially for something like perishables.
Extremely closely, yes. We must separate financial valuation from physical tracking. While the cost is smoothed out via average pricing, the physical tracking is incredibly granular.
Okay, so how do they track the actual boxes?
They utilize real-time barcode generation, but the critical feature is the batch, lot, and serial number tracking, which the guide emphasizes for recall management.
Recall management. Let's play this out with a real-world scenario. Say I run a massive food distribution network. I purchase 1,000 pallets of romaine lettuce from various farms.
Food safety is the ultimate test of supply chain visibility.
Definitely.
If a federal regulatory body suddenly announces a severe salmonella outbreak originating from one specific farm in California, you are facing a massive crisis.
Right. If my warehouse software just says 1,000 pallets of lettuce, without batch tracking, I am forced to destroy the entire inventory, taking a massive financial loss, or I risk shipping poison food to supermarkets.
Which could destroy the company.
Yeah.
But with APS's granular batch tracking, you run a query for the specific lot numbers associated with that California farm.
And it finds them.
In seconds, the system traces the exact journey of that specific lettuce. It tells you that 2 pallets are sitting on rack 4B in your Chicago warehouse, and 3 pallets were already loaded onto a delivery truck bound for a specific client.
Wow.
You can isolate the contaminated goods instantly, issue a highly targeted recall to the specific driver, and present the audit trail to the regulators to prove you contained the danger.
It elevates inventory management into precision crisis management.
Exactly.
And this level of granular tracking extends into their manufacturing module as well, right? Specifically how they handle the BM, the bill of materials.
Yes. The manufacturing cycle in APS is deeply integrated into this continuous loop.
How does the bill of materials work here?
Well, a bill of materials in the system isn't just a recipe for how to build a product. It is an automated financial directive.
Meaning?
When a floor manager initiates a manufacturing run, the system automatically pulls the exact required raw materials from the inventory ledger and dynamically allocates that financial value into the work in progress, or WIP, accounts.
So the finance team knows exactly how much capital is tied up, sitting half-assembled on the factory floor at any given moment.
Precisely. And it enforces rigorous accountability regarding waste.
Okay, waste is a huge problem in manufacturing.
Right. If the digital bill of materials dictates that a product requires exactly 1 kilogram of steel to manufacture, but the factory floor sensors or workers report that they consumed 1.1 kilograms due to a cutting error, the system doesn't just ignore it.
What does it do?
It instantly logs that 0.1 kilogram as scrap, removes it from raw inventory, and recalculates the true cost of that specific manufacturing run.
So you can't just hide mistakes.
No, it provides total visibility, preventing the slow, silent bleed of unaccounted material waste from destroying a company's profit margins.
We have the money flowing seamlessly. We have the physical goods tracked down to the exactogram and batch number. But ultimately, a business is nothing without the human beings moving those boxes and doing the work.
The human element is crucial.
Let's pivot to that. How does APS handle the immense complexity of global payroll and field operations?
It tackles human resources with a distinctly international architecture.
Okay.
The source document outlines a visual, highly interactive dashboard designed to manage taxes, social insurance, and regulatory compliance across 7 distinct countries simultaneously.
7 countries. Which ones?
Egypt, Saudi Arabia, the UAE, the USA, the UK, Germany, and Spain.
That is a wildly diverse set of regulatory environments. I mean, the labor laws, the overtime rules, and the tax brackets in Germany are fundamentally different from the labor laws in Saudi Arabia or Texas.
And that diversity is exactly why a localized AI compliance shield is necessary. The underlying ERP handles the complex regional math, allowing the central corporate management to look at a unified global dashboard.
So they can see everything in one place.
Right, they can review the labor costs across 3 continents and post the global payroll as mathematically perfect journal entries with a single click.
That's incredibly powerful for the corporate office.
But beyond the corporate office, the guide details a specific feature for field operations that is truly compelling.
Oh, the on-site attendance feature for daily wage workers. I zoomed in on this too.
It's a really interesting approach.
It is designed specifically for site supervisors to log the attendance and hours of laborers at physical work sites, entirely bypassing the need for the workers themselves to interact with the software.
Yes.
I love this. I call it an anti-text solution.
Why does that specific framing stand out to you?
Because so much enterprise software suffers from what I call Silicon Valley bias.
Silicon Valley bias.
Yeah, it assumes every single employee sits in a climate-controlled office with a $1,000 smartphone in their pocket and a stable Wi-Fi connection.
Oh, absolutely.
But think about the reality of a muddy, chaotic construction site. You have daily laborers doing back-breaking physical work. They might not own smartphones. They might not have data plans.
And they shouldn't need them to do their job.
Exactly. They absolutely should not be forced to download a corporate app and remember a password just to get paid for their labor. The APS system allows the site foreman, who does have a connected tablet, to simply tap a screen to log the crew's presence.
It is a brilliant example of pragmatic user design. What APS is doing here is bridging the digital divide.
Right.
They are taking the most analog, disconnected segment of the workforce, the daily physical laborer, and integrating their effort directly into the real-time neural ecosystem without imposing a technological burden on them.
Because the moment the foreman taps that tablet, that laborer's time is instantly tied to a digital timesheet in the cloud.
Yes. And because of the domino effect, that timesheet isn't just a static HR record. It is instantly mapped to project accounting.
Oh, wow.
The system knows that specific laborers' hourly rate. It knows they are assigned to the downtown high-rise project, and it immediately calculates and accrues that labor cost against the project's real-time budget.
So the budget is updated instantly.
Furthermore, if those construction hours are billable to a client, the system can autonomously transform those logged hours directly into an outgoing invoice.
That's incredible.
The physical sweat of a worker on a muddy site is translated into actionable corporate financial data in milliseconds without a single piece of paper changing hands.
It's incredibly elegant. Now, if we talk about scaling from a construction site where things move relatively slowly over the course of a day to a hyper-fast environment, how does the system adapt?
Speed is a different challenge altogether.
What about the absolute chaos of the retail and hospitality sectors?
Well, the restaurant industry is arguably the ultimate stress test for data velocity. The guide dedicates an entire section to their cloud POS point of sale and KDS, which is the kitchen display systems.
Let's set the scene for a restaurant. Think about a wildly popular restaurant on a Friday night. It is packed.
Total chaos.
The waitstaff is stressed. The noise level is deafening, the kitchen is shouting, and nobody seems to know if table 4 got their appetizers yet.
A standard Friday night.
Exactly. That chaos is almost entirely a data problem. It's the friction between the front of house, dealing with the customers, and the back of house, trying to cook the food.
Right.
Information is constantly being lost in translation or delayed by physical paper tickets.
And APS addresses this friction through aggressive digital visualization and real-time syncing.
How does the front of house see it?
The front of house operates on a fast, cloud-based POS, that is inextricably linked to a dynamic visual table map. The hostess or manager can see instantly on an iPad exactly which tables are available, which are occupied, and which are reserved, updated by the second.
Which stops the hostess from seating people at dirty tables.
Exactly. But the core operational upgrade is the KDS, the connection to the kitchen.
Right, because when a waiter takes a complex order with 3 modifications, they aren't writing it on a pad and handing a grease-stained piece of paper to a line cook.
Exactly. The order instantly appears as a digital color-coded card on a heavy-duty tablet mounted in the kitchen.
And the mechanism that drives the efficiency here is what APS calls one-tap status updates.
Yes, the workflow is entirely touch-based for the chef.
So they just tap the screen when the steak hits the grill, they tap it when it's resting, and they tap it when it's plated and ready for the waiter to pick up.
Yes. But remember, this KDS is not a standalone app. It is a node in the neural business ecosystem.
Right, the domino effect.
That single tap from a chef whose hands are covered in flour does infinitely more than just turn a screen green for a waiter.
What else does it do?
It triggers the domino effect for a single plate of food. That tap might command the database to instantly deduct 8 ounces of beef and a handful of potatoes from the raw inventory ledger, calculate the exact cost of goods sold for that dish, and update the daily revenue and tax ledgers.
It's applying enterprise-grade ERP architecture to a hamburger.
Exactly.
And the guide also mentions they support QR digital menus and self-ordering kiosks.
Which is becoming standard, but their integration is deep.
If a restaurant is severely understaffed, they can essentially remove the waitstaff bottleneck entirely, allowing the customer's smartphone to inject orders directly into the kitchen's KDS and the corporate accounting ledger simultaneously.
To run a system that spans such wildly diverse environments, from quiet corporate finance offices to muddy construction sites to grease-filled restaurant kitchens, the underlying software architecture has to be phenomenally resilient and adaptable.
Which brings us to the technical foundation of APS. Let's look at the tech specs. They built this entire ecosystem as a PWA, a progressive web app.
The choice to use a PWA is a strategic masterstroke for deployment.
Why is that?
A PWA operates through any standard web browser, but it utilizes modern web capabilities to deliver an experience that feels identical to a native downloaded application.
I always explain PWAs by comparing them to water.
Okay, I like that.
If you build a native app, it's like a block of ice. It only fits in a specific shape, like an iPhone. But a PWA is fluid. You pour it into whatever container you have, a desktop Mac, a Windows PC, a cheap Android tablet, or a high-end smartphone, and it perfectly takes the shape of that screen.
That's a really good way to put it.
You don't have to navigate the bureaucracy of the Apple App Store or Google Play. You just open the URL, click Add to Home Screen, and you have instant secure access to the entire ERP.
And because it is universally accessible from any device connected to the internet, security protocols are paramount.
Right, you don't want just anyone accessing it.
The guide explicitly details their use of RBAC role-based access control.
What does that do?
This is the security architecture that isolates data access. It ensures that a company has granular, micro-level control over what every single user is permitted to view or alter.
So the chef only sees food orders.
Exactly. The chef in the kitchen can see the digital order tickets, but the RBAC absolutely prevents them from accessing the CEO's global payroll dashboard.
It compartmentalizes the data while keeping the ecosystem unified.
Precisely.
For any business owners listening who are currently fighting their own Rube Goldberg machines and want to see this architecture in action, the guide does provide direct contact information. You can reach out to the developers at sales@appsoft.org or contact them directly via phone or WhatsApp at +21 030 34 1901.
It's definitely worth checking out if you're dealing with data silos.
But before we close out this deep dive, we have to explore the final section of the source document, because APS is not just focused on solving today's friction.
They're looking way ahead.
Yeah, they have published their Vision 2026-2027, and the roadmap they are laying out for the near future of enterprise software is wild.
It is a highly ambitious glimpse into the next evolution of corporate data. They highlight 3 massive structural initiatives on the horizon: green accounting, blockchain integration, and augmented reality.
Let's tackle green accounting first. The guide suggests they want to use the APS engine to track a company's carbon footprint.
This is an incredibly prescient strategic move.
Why do you say that?
We are rapidly moving toward a global regulatory environment where tracking and reporting a corporation's carbon emissions will become just as strictly enforced and legally critical as tracking their financial revenue.
It's already starting in some regions.
Currently, carbon tracking in most companies is a messy process of estimates, guesswork, and manual spreadsheets compiled at the end of the year for a PR report.
But if APS applies the real-time domino effect to carbon,
The implications are massive. Imagine if scanning that barcode in the warehouse did not just update the financial cost of the item, but simultaneously calculated the precise carbon footprint of its manufacturing cycle, its shipping weight, and its transit distance, and logged that data into a unified, mathematically rigorous green ledger.
wow.
It transforms environmental impact from a vague marketing talking point into an exact auditable science, integrated directly into daily operational decisions.
You could literally see the carbon cost of a decision in real time alongside the financial cost. That is huge.
It will be a game changer.
And then they outline blockchain for smart contracts.
The integration of blockchain into a corporate ERP is ultimately about automating trust across complex supply chains.
Automating trust.
Right. A traditional contract requires human enforcement. A smart contract is self-executing code.
How would that work in APS?
Imagine a scenario where APS detects that a shipping container of raw materials has physically arrived at your loading dock. The warehouse worker scans the receipt. The AI verifies the inventory and matches the purchase order.
Okay, standard so far.
Then, the blockchain smart contract automatically, autonomously confirms the delivery with the supplier's external system and releases the payment instantly, creating an immutable cryptographic record of the transaction.
Without anyone approving the invoice manually.
Exactly. It removes the need for escrow accounts, manual human verification, and costly dispute resolution. The underlying code itself becomes the incorruptible enforcer of trust between two separate companies.
It removes the friction of trusting the other guy. That's amazing. And finally, they mention augmented reality for warehouse inventory.
This one sounds like a sci-fi movie.
It really does. I want you to picture this scenario. Instead of holding a clunky plastic scanner and looking down at a tiny screen, a warehouse worker is wearing a pair of lightweight AR glasses.
Just normal-looking glasses.
Right. As they walk down the massive aisles, they look at the physical cardboard boxes on the shelves. The APS system uses the glasses to project digital holograms directly into the air around the boxes.
Like a heads-up display.
Exactly. They can physically see the stock levels, the batch numbers, and the expiration dates hovering in glowing text right in front of their eyes. It is literally overlaying the digital intelligence of the ERP onto the physical reality of the warehouse.
It represents the ultimate realization of the neural business ecosystem philosophy. It is bringing the data out of the confines of a two-dimensional screen and integrating it seamlessly into human perception.
We have covered an immense, complex landscape today. We started with the foundational idea of building a nervous system for a business, a microsecond domino effect that finally shatters data silos.
It's a huge step forward.
We explored a read-only AI doctor that proactively shields executives from compliance disasters, a system that lets you command your data in natural language, and a math engine powerful enough to close a financial year continuously in 90 seconds.
It's hard to believe until you break down the mechanics.
Right, and we've seen how this architecture bridges the gap from daily laborers on muddy construction sites to chefs in chaotic kitchens, all the way to a future of augmented reality supply chains.
It is a remarkable technical journey, moving from historical friction to future fluidity.
For sure.
But I want to leave you with a final thought to mull over. Building on the trajectory we have discussed today, we have examined this software as a hyper-efficient nervous system, tracking finances, regulatory compliance, and eventually carbon footprints.
Right.
If an AI ecosystem becomes this deeply, inextricably integrated into the daily decision-making process of a company, if it is actively warning you of hidden anomalies, translating languages for your global team, drafting your ledgers, and proactively shielding you from legal liability, at what point does the software stop being just a tool that you use and effectively become your digital co-founder?
Wow, that is a profound question. Is it a tool in your belt, or is it a partner sitting across the desk from you?
Exactly.
That is definitely something to chew on as we look toward the future. Well, that is all the time we have for today's deep dive. We hope you found this exploration of the APS ecosystem as fascinating as we did.
Thanks for listening.
Keep questioning the systems you use every day. Keep looking for better ways to connect the data in your life. And above all, stay intensely curious. We will catch you on the next one.